Hey everyone, welcome back to Corporate Decoder. Today we're diving into Bionano Genomics, and trust me, this isn't your average genetics lesson. It's more like a financial roller coaster with a few unexpected twists. Think of it as untangling a very long strand of DNA, but instead of finding a cure, we're looking for clues about their money moves. So what's the scoop? Bionano Genomics filed a Form 8K, which is basically a corporate alert for big news. The date is February 21, 2025. Seems like they're shaking things up with how they're selling their stock. Let's cut to the chase. Bionano is changing how it raises money from selling shares of its stock. They stopped one way of selling stock and started another. Let's break it down. First, they stopped using an agreement they had with a company called Cohen to sell their stock. This agreement, called the sales agreement, was terminated. It's like ending a contract with one real estate agent and hiring another. They originally agreed to this arrangement back in March of 2021, and it was updated in March of 2023. Bionano officially put an end to this relationship around mid-February 2025. So why the change? Well, on February 21, 2025, Bionano entered into a new agreement with a company called H.C. Wainwright & Co. This agreement is called an At-the-Market Offering Agreement, or ATM agreement for short. It's like a financial ATM, allowing the company to sell shares little by little over time. Think of it as Bionano having a shelf filled with stock, and they can take some off the shelf and sell it whenever they need some extra cash. Here's how it works. Bionano can choose to sell shares of its common stock through Wainwright, who acts as a sales agent. This means Wainwright will try to sell the shares for them. Bionano isn't forced to sell any shares if they don't want to. It's totally up to them. This whole process is tied to a previous filing with the SEC, basically paperwork that allows them to sell stock. Bionano can sell up to $75 million worth of its stock through this new agreement. Now for the nitty-gritty details. Whenever Bionano wants to sell shares, they tell Wainwright how many shares they want to sell when they want to sell them and the minimum price they're willing to accept. It's like setting the terms for a yard sale. Wainwright then tries to sell those shares using their best efforts, following standard trading practices. They can sell the stock directly on the Nasdaq Capital Market, which is where Bionano's stock is traded, or through private deals. It's like selling your old car either online or directly to buyer. Of course, Wainwright doesn't do this for free. They get a commission, which is a percentage of the money made from each sale. In this case, it's 3.0% of the total amount. They also get reimbursed for some legal costs. The ATM agreement can be terminated or ended by either Bionano or Wainwright. Bionano has to give Wainwright 5 business days notice, while Wainwright can end the agreement at any time. Think of it as a flexible arrangement that can be changed if needed. There's also some legal stuff involved. Bionano provides Wainwright with protection against certain liabilities, which is standard in these kinds of agreements. It's like an insurance policy to protect Wainwright from potential legal issues. Now let's talk about what this all means. Bionano changing its stock selling strategy could mean a few things. Maybe they weren't happy with the previous arrangement with Cohen. Perhaps they think this new ATM agreement with Wainwright will be more effective. Regardless, it's a move that could impact the company's stock price and its ability to raise capital. It means they're looking for more flexibility in how they finance their operations. So what's our take on Bionano Genomics? This new agreement seems like a way for Bionano to have more control over how they raise money. It's like having a credit line they can tap into whenever they need it, rather than relying on a fixed loan. This gives them flexibility, but it also means they're potentially diluting the value of existing shares, because each share is worth less when there are more shares out there. Looking at Bionano's direction, it's clear they're in a growth phase, constantly innovating in the genomics space. However, they're also burning through cash, which is why they need these financing arrangements. A key risk is whether their technology will gain widespread adoption and whether they can achieve profitability. In terms of stock price, it's hard to give a precise target without diving deep into their financials, but based on their current situation, a fair price range would be somewhere between $1.50 and $2.50 per share. This assumes they can successfully execute their growth strategy and eventually become profitable. Overall, I'm cautiously optimistic about Bionano. They have innovative technology, but they need to prove they can turn that innovation into profit. They may not be there just yet, but the potential is there. Thanks for watching. If you found this breakdown helpful, don't forget to subscribe for more Corporate Decoder videos.